Thank you for logging on to the London Stock Exchange website and joining us for another in the series of CEO video interviews. We're joined today by Mark Allan, CEO of Unite Group, who's very kindly going to answer some questions about his company's business model and strategy, its status as a low-risk investment, some fundamentals about the student accommodation market, and his thoughts on the future. Mark, welcome.
Thank you. Good morning.
Perhaps to begin, you could give us an overview of Unite Group, your business model and strategy.
Certainly. Unite is the UK's largest provider of student accommodation, and to put some scale and context to that, for the academic year 2012-2013 we will be operating 42,000 rooms across 23 cities all over the UK. We're a developer and a manager of student accommodation, and what I mean by that is that the vast majority of that portfolio we have built ourselves, and we are then the ongoing manager and indeed an investor in all of that portfolio. So around 90% of that portfolio we built ourselves. We're a FTSE 250 company, 21 years old, so although that's relatively young in overall terms, we're the oldest operator in our sector, so we've been doing this for a long time, and that gives us a huge amount of experience and expertise that we work hard to reinvest in our business from one year to the next to make sure we're continuously improving what we're providing in terms of service.
Excellent. And you appear to have very recurring cash flows, high occupancy levels and a large asset portfolio.
We think so. One of the features, strong features of our market for the last 20 years has been steady, consistent growth in student numbers in the UK. And that's been driven by demographics, the number of university age people growing as a proportion of the population overall, government policy wanting to get more people going to university, and also international students coming to study at UK universities, which have a fantastic reputation globally for the quality of education that they provide. And what that has translated to for us as a business has been high occupancy, high demand for our properties. So we've been consistently in the high 90% occupancy each year across the portfolio, and it also translates into steady rental growth from one year to the next. So from that perspective, that all translates into strong recurring cash flows. And for us as a business, it's critical that we're allied to the strongest universities, and so we need to be in the stronger university locations. It's not simply a case of being near any university, it's making sure that we are working closely with the universities that we think are going to be successful in the long term in continuing to attract students. So I think it's a combination of those factors which create the recurring cash flows and the low risk nature of the market that we operate in and us as a business.
Understood. There seems to be a perception, rightly or wrongly, more recently of falling numbers of students in the UK. What's the makeup of Unite's customer base and what are its defensive qualities?
You're right that this year, 2012, there has been, for the first time, a drop in student numbers, and that's followed on from a 20-year period during which student numbers have doubled. So we've seen incredibly rapid growth. And what that has delivered for our sector and for us as a business is a real shortage of accommodation. So whilst there's been a doubling in student numbers, the proportion of, or the number of new student bedrooms delivered has not been able to keep pace. So we've got this huge shortage of accommodation as things stand at the moment. This year we've seen a drop in student numbers for the first time, but we think that's a temporary blip. It's because of some government policy changes that have been introduced, and the most important thing to understand is that the fundamentals are really untouched. There will be something like 170,000 people that applied to go to university this year that weren't able to get a place because there aren't enough places available at universities. So even with that change, we've still got, in terms of defensive qualities, a lot more people wanting to go to university than there are places available at university, and then once at university there isn't enough accommodation to house those students that are successful in getting there. So I think in terms of looking forward, that does underpin a lot of the defensive characteristics of our business.
So there's a much bigger supply and demand dynamic going on rather than just one nominal year statistics?
Absolutely. We're not starting from a point of view of where demand and supply are in balance. We're starting from a point where there is a real shortage, and so we've still got a huge amount of opportunity ahead just to tackle the current shortage, let alone deal with ongoing growth going forward.
And why is London such an attractive market for the company?
Well, London is represents about 25% of the total UK student population. It's bigger than the next five largest cities in terms of student numbers combined. So there's well over 250,000 full-time students studying in central London. And it has a far bigger shortage of accommodation than any other city. So in broad terms, there is one bedroom for every 3 students looking for a bedroom and for whom universities try to provide bedrooms in London. For the rest of the UK, that figure is more like 2 bedrooms for every 3 students. So there's a huge shortage there. There's also a huge number of universities, and very high quality universities with really strong global reputations within London, which means it should always be a destination city for people looking to study at university. And that in itself drives a huge international student population coming into London. So around a quarter of the London student population is from overseas, from outside of the EU. And if you look at our customer base, because of the type of product that we provide in great locations with very high levels of service, great security, those sort of things are very appealing to international students. It means that within our portfolio, we're about half of our portfolio is let to international students, and in some of our London properties that will be as high as 90% in central London. So all of those things I mentioned about the UK market, I think apply to London even more significantly.
Understood. And if you had to leave viewing investors with an inkling of the next 12 to 24 months, you seem to have a lot of revenue visibility and a conservative development plan. What should investors expect?
Well, in terms of what we're focusing on for the next 12 to 24 months, our strategy, I should say first and foremost, we are remaining focused exclusively on the UK student accommodation sector. It's a market and a sector that we understand and we have a market leading position in. And then there are really 3 things that we're focusing on in terms of delivering returns. The first is to grow recurring cash flows, continue growing recurring cash flows in the business, and to do that really by focusing on the strongest locations, delivering great levels of service to our customers and seeing that translate into rental growth. Alongside that, to keep a very close control on costs within the business. I think that's critical, particularly at a time when the economy is struggling. And then also to grow the portfolio steadily through a development programme. That links to our second point, which is indeed our development programme. We have a conservative development programme. We're certainly not wanting to take high levels of risk to try and grow the portfolio. And what I mean by conservative development programme is a focus on London in particular and on the most affordable locations. As with any property sector, it's about building the right property in the right location and seeking the right price for it. And we're very focused on that. And we think London and affordable locations really fits the bill in that regard. And then the final element of our returns is to make sure that we're continuing to deliver steady capital growth. So increasing the value of our portfolio, our investment in our portfolio. And that really is down to our focus on the strongest locations and also investing carefully in the portfolio to make sure that we maintain and indeed over time enhance its quality. So those 3 things together underpin our strategic objective to deliver a low double-digit total return on our equity.
Mark, thank you.
Thank you.
And thank you too for logging on to the London Stock Exchange website.